On March 30th of this year, 2026, a client reached out to me and asked a question about moving the portfolio to cash. Now, he historically has been a risk averse conservative investor. And part of the reason why we started working together was he wanted to feel more comfortable investing and taking on more risk. Now, I wanted to point out what happened in this situation because it's a perfect case study and example of why most investors struggle. So, on March 30th, that happened to be, at least so far, the exact low in the Iran conflict. And so if we look at the chart here of the S&P 500, that day was the bottom. And then things continued to rally significantly, up 10, 11% from there. So this is a perfect example of why most investors struggle. There's so much media and influence and emotion caught up in what's happening in the world, on the market. Headlines are bad. We're hearing things. We're worried about recession. We're worried about this, '08, revisiting that or similar situation. And so everyone has this mentality that we're doomed. Things are bad. And how could it not be? We've got this war going on, this conflict. Everything we're hearing is very bad. Markets are selling off. And so it seems like, okay, well, I should do something. I should go to cash. So I sent him a response back. If you would like to see that full response, I've got a link to it in the description. But ultimately, I totally understand this mentality. And this is the challenge for a lot of investors. This happens over and over and over again. But the reality is that the time to make a change is not when we're already in the depths of it, right? And there's something called sentiment, which is sort of an indicator of one way you can view markets, where the more that you're hearing about something, the likelihood is that that's already been priced in to the market, or we're sort of past the worst of it or the best of it, right? So the more and more you're hearing, the more conversation, the more news, the more whatever is a good indicator that we're starting to get closer to the end of that, right? And, COVID is another good example where I was hearing there was talk about this virus in China, things were coming, but the market wasn't really responding. People weren't really talking about it. It was only in select circles that people were really watching this. And then what happens? It becomes mainstream, things start to sell off, everyone starts to freak out, and then the market goes back up, right? And so, this is obviously not always the case. There's lots of nuance to this, but the reality is that, when people start to hear more and more, start to think more about that, and they get to a point themselves where they want to take action, that's usually a pretty strong indicator that it's too late. And so I told him that part of the reason why we hadn't gone to cash was, one, I didn't think the conflict was going to be or have a long-term impact on the markets. And at least, so far that's been the case. We've now rallied again past prior highs to new all-time highs, even though the conflict isn't really fully over. And so thinking about it from a market perspective, the market wants to look past this. It wants to position ahead of the future. And if that underlying outlook is good, then that's what the market wants to do. And so you can trade headlines, you can trade emotion, but that's a recipe for disaster. And ultimately, what you really want to do is you want to be ahead of these things and position your portfolio ahead of time so that it responds in a way that you're comfortable with, and or you make any of those adjustments early. And so I had the take that this was going to be a short-lived conflict. I didn't want to move the portfolio to cash because I didn't want to miss out on the potential rebound and return. We were already up pretty significantly on the year, and so we were eating into some of those gains, but we weren't down. And so that's how I was thinking about it. Of a lot of times, some of the biggest rallies come right around the biggest sell-offs, and the market, especially these days, can move very, very quickly. And so if we're out, we completely miss out on that whole opportunity. So I'd rather maintain some broad exposure and focus on the sectors and the areas of the market that are working well than just be totally out. And I go into more detail in that response I sent to him, but I wanted to kind of reiterate that, the biggest risk is not the market going down. That's inevitable. It's really how you handle these types of situations, and that your portfolio needs to be set up in a way and managed in a way that's going to position you ahead of time for things to come. And that's very, very difficult. I'm not going to downplay that by any means, but it is possible. And that's what most investors aren't doing, aren't capable of. And most advisors and most investment professionals don't think about it that way. But that's what we've done, here at Off Beam Path Financial. And, we manage this conflict quite well. And the portfolio and the returns reflect that. So check out that link for more information. But this is just another great example of when everyone's freaking out, it's probably a good time to buy, not necessarily to sell.